Let's kick off by looking at the manufacturing number in South Africa. It came in at 6% year on year, and from a tepid growth level of 1.6% year on year in the likes of January. February's number, of course, was nearly double the rate forecast by many of the economists out there as well. Are we comfortably in a recovery period when it comes to manufacturing?
I think we are. Well, last year we saw a very good recovery coming through, but most of that was a result of post-recession replenishment story. So I think now what you're seeing is probably manufacturing activity that is very much driven by what is happening at the retail level. I say this because when you're looking at manufacturing, when you're looking at vehicle sales, they've been very strong. And when you're breaking down the manufacturing data that came out today, at the core of it is manufacturing of cars and also accessories. I think I'm taking that as a cue that maybe manufacturing production is in fact going through a very good recovery phase.
And it's so fascinating when you're talking about the growth driver there, and that being the vehicle parts and the accessories and other transport equipment as well. Textiles, clothing, leather and footwear. No surprise there. We actually saw a significant decline in production. Can we ever become competitive within this space?
Well, like you say, I mean, it's not a surprise. But I think the positive aspect that you're seeing that's coming out of policy, when I say policy, I mean government, is the fact that when you're looking at the industrial policy action plan, at the core of it, you're seeing clothing and textile coming up. There's clearly an emphasis there also from an IDC to stimulate that part or that sector of manufacturing in general. So I'm hoping that, well, within a 3-year, 4-year horizon, you could start seeing the clothing and textile sector also coming into the party.
When you look at the underlying PMI number, we are sitting at 13-month highs. So it is relatively exciting. Employment still being a lagging factor. Do you think that there's a massive difference from what we're seeing on the manufacturing side, the actual manufacturing numbers relative to PMI?
Well, of course not. I think the PMI has always been a very good indicator of what's going to happen with the actual production, especially when you're looking at the component of PMI that is business activity, because that tends to measure directly what's happening at the production level. And that shot up quite substantially in March to a figure in the region of about 59 odd. So that in itself says the March manufacturing production figure could be substantially higher than the 6% that was recorded in February. And that is happening in that space where I say that I think overall the next few months will give us a good indication of how strong manufacturing production overall is.
Monale, we had an interest rate hike by the ECB today, 25 basis points. Many say that it's largely been factored in. How are you reading into this? Also just keeping in mind that at the same time as we're seeing a rate hike, we're also seeing liquidity coming to the fore in Europe. In other words, a lot of purchasing of bonds as well. Do you think that it's counteractive, these two elements?
Yeah, well, I think, you know, the ECB is probably trying to send just a warning shot. I don't think, as Tricia has said, he doesn't believe this is the first of a series of rate hikes. This is very much because on the growth side, nothing's really happening. I mean, they're posting 2% GDP growth. That is nothing at the level that, you know, I think the ECB would be comfortable with. I think this is very much driven by the concerns around inflation, which is rising globally. But our Q, I think from a domestic point of view, even though we're starting to see similar inflation pressures, I don't think we need to start factoring in interest rate hikes for this year. And very much so because
in South Africa, so no interest rate hikes for South Africa this year.
I don't think we're going into that space. I think very much we'll be going in the direction of the UK. In the UK, they're looking at inflation to be around 2% as their target. Inflation is currently running towards 5%. This is because when they're seeing growth that is just laboring along, that the balance in itself says that they need to be taking it easy on inflation that is coming from supply side shocks. And we're seeing this with petrol prices domestically, electricity prices, things that you can't really control with monetary policy. And I think it will be very prudent for us to hold on a bit.
Monale, don't you think we're also seeing inflationary pressures because of all the liquidity that has been pumped into these markets, particularly the UK, in Europe and also the US, and China has also embarked on a massive stimulus package. Can't we tie those two stories in together?
I don't think so. I mean, at the core of the global inflation story at the moment is the oil price and also food prices. And these are not areas that have anything to do with monetary policy overall. It's got nothing to do with money supply. Yes, money supply is a bit of a problem, and we know for a fact that we've got excess money supply across the economies, but that is not where the inflation is coming from. Domestically, we've been the Reserve Bank has been mentioning money supply in the previous MPC statement, but this, I think, is because they've been buying dollars against the rand in the market, in itself saying that they're supplying the rand, and they have to mop it out. I think that's why they've been focusing on money supply.
So oil, Brent crude sitting at $123 a barrel or so. An off-cited rule is, many say that when we see a $10 increase a barrel on oil, then we can perhaps assume that 50 basis points could be wiped off global growth if it is sustained at that level for an extended period. What kind of impact are you expecting on global growth?
Well, I think from the cues that you're getting from the IMF, you're looking at probably a figure between the 4 and 5% region for this year. But this is mainly coming out of China and India. So when you're looking at what's going to come out of the US, out of the Eurozone, the UK, it's not really that much. And that even says I think central bankers across the globe have to really apply a lot of caution when they deal with monetary policy, because there's potential that by tightening the screws too early, they can send us back into the slum.